Hello everyone, this is Jennifer. In this video, we're going to look into the budgetary control. So, first of all, what is a budget? A budget is basically the monetary or the quantitative expression of the business plans or the policies that are pursued in the future. So, basically, you're planning ahead of how you need to take care of the cash or monetary transactions. Okay, so it's a business plan referring only to the monetary of the or the quantitative expression which needs to be put into action in the future. So the ICMA England defined a budget as a financial or a quantitative statement prepared and approved to a definite period of time of the policies to be pursued during the period for the purpose of attaining a given objective. So it is a quantitative statement wherein it can be measured and it is approved for a definite period of time in the future which needs to be executed. So it can be a policy or a business plan, and it is for the purpose of achieving a given objective. So basically, like cost minimization or profit maximization, profit such kind of objective. So what are the essential features of a budget? The first one, it is a comprehensive plan of action for a specific period of time. So it is basically a plan of action which is pre-planned for a specific period of time. So second is, it is based on future plan of activities which are prepared in advance. So what needs to be done in future, we are planning it today itself. Third, it is a specific form of statement in which management plan is numerically expressed. So the management plans and the ideas are numerically expressed, which are expressed in the terms of monetary or which are expressed in quantitative terms, which helps in the implementation of the policies which are made by the top level management. Point number 4, it is a statement of the objectives to be attained and the policies to be followed in the future period. So it is a statement which tells the objectives to be attained in the future. So ultimately, those quantitative terms tell the objective that needs to be attained and the policies that needs to be implemented in the future period. Point 5, it is a tool for developing the cooperation and coordination and control. So everybody will work towards the budget. So at that time there is cooperation, coordination and control because they know what needs to be done ahead. So objectives of budget. So why the budget needs to be prepared? So what is the use of preparing budget? What is the objective behind the preparation of budget? So there are various objectives of preparation of budget, basically to plan or forecast for the future so that there are no losses happening, and to maximize the profits, to ensure it is planned for futures, but by setting up various budget. So we are planning for the future by setting up various kinds of budget like your sales budget, production budget, cash budget, etc., to coordinate the activities, to fix up responsibility of various individuals in the organization, because sometimes they will not know for what they are working for. So if you prepare a budget, they will get to know, they will have a clear picture of what they are working towards. So budgeting, let us look into the next concept of budgeting. So budgeting basically refers to the procedures followed in order to prepare the budget. So it is a procedure for preparing plan in respect of future financial and the physical requirement. So the procedure in order to follow to prepare the budget. So in the words of W.G. Watter, budgeting is a kind of future accounting in which the problems of future are met on the paper before the transaction actually occurs. So it is basically what's going to happen tomorrow. What is the problem that is going to happen tomorrow are seen today itself in paper. So we are accounting for that today itself. We are getting an idea how to sort out the problem tomorrow. That is budgeting. So are the what is the concept of budgetary control? So budgetary control is nothing but so control itself in an organization. When you look into control, when do we do basically a control is cost control. So we want to avoid the cost or reduce the cost, and we want to maximize the revenue at a higher level. So budgetary control basically aims at mobilization or utilization of the available resources more efficiently productivity so that we can maximize the revenues in the future. So what are the objectives or the features of budgetary control are? So budgetary control helps in preparation of budgets for a future period. So that is one of the feature of budgetary control. So when you want to control cost, when you want to increase your revenue, so you first plan out for it. So how do you plan out for it? By preparing a budget for it. So it helps in preparation of budgets. Second is when you prepare a budget, when you do the actual performance, what do you first do is you compare your actual performance with your budgeted performance in order to see whether we are achieving our target. And the third one is we always measure our actual performance at the end of budgeted period to see if we are matching up with the budgeted performance. And the fourth one is analysis of the reasons for not achieving the target so that corrective measures can be taken. So if our actual performance is lesser than our budgeted performance, then we see where all corrective measures can be taken. And what are the advantages of budgetary control are? It helps in coordination of different departments working towards overall organizational activities or working towards the overall achievement of the organizational policies. Second, it acts as a yardstick wherein it helps us in comparing our actual performance with the budgeted performance. By this you can take corrective measures if we are not achieving targets. Third one is it helps the management to review the performance of different budget centers both continuously and periodically, so better control can be created. It also creates healthy competition among different divisional managers, making them ensure to optimize the utilization of the available resources in order to achieve the objectives of the organizations. It also provides valuable aids to the management in order to execute their managerial functions so that they can adopt the future course of action in a scientific way. The top level management exercises the control of the various activities of the business. And also there's something called as budgetary control helps in standard costing, introduction of standard costing. So what is standard costing? So it is a process or the practice of estimating the expenses of the production process. So basically you estimate what needs to be what is your production cost. And finally, it helps in the efficient, effective utilization of the resources. So you maximize your resource utilization by minimizing your cost by adapting to the budgets. So what are the limitations of budgetary control is sometimes the budget proves to be useless in those firms wherein the policies, the process techniques which keeps changing, because you need to keep changing your budget according to it. So at that time it feels useless. Second is budgets are always based on estimates. It forecast if forecasts are not are made on the basis of inadequate and inaccurate data, budgeted figures would be far away from realities. So the target set would also be accurate. So basically they have made a mistaken sentence over here. So if budgets are made on inadequate data which are far away from reality, so the future targets are also which is unreal. Okay, so that time or it is inaccurate budgets. The third one is budget clearly specifies the targets and ways through which targets can be achieved. Mere budget preparation of budgets will not ensure the desired results. So just not putting the target in a budget, so the ways through which targets can be achieved also should needs to be executed in the budget, so that it helps in achieving your result. There are many factors over which management has no control, but the budgetary control system depends on them. So in such a case it may be inaccurate and fails to serve the purpose for which it is meant. So there are various purposes for which the management doesn't have a control. So in those cases it will be inaccurate for the budget when it is prepared according to it, because it fails to serve the purpose of the existence of being the budget. Budgeting is an expensive tool. It basically does not access to the small concern. Budgets are not a substitute for the management. So the management decision, the management control, the management functions are very important apart from the budget. So what are the different types of budget? What is the classification of budgets? So budgets are basically classified on the basis of time, nature, consent and functional aspects. So on the basis of time, budgets are classified into long term budget, short term budget and current budget. Long term budgets, these budgets are basically prepared for a long term or it is prepared for the long term planning of the business. Basically it ranges from 5 to 10 years. Second is your short term. These budgets are generally prepared for 1 or 2 years, and it is known as short term. Current budgets, so these budgets are prepared just for a month or a week, just to analyze what needs to be done currently. So these budgets are known as current budget. Second, on the basis of nature, budgets are being classified as fixed budget and flexible budget. So fixed budget are those budget which are prepared on the basis of fixed or given level of activity. So it does not make any change if the level of activity changes in comparison with the budget. So it is just the given level of activity. It does not change the activity position like 80%, 100%, 10% of utilization. Whereas flexible budget frequently changes the level of activity. So on the basis of their content, budget can be of two bases. One is monetary term, the other one is physical term. So on the basis of monetary term, budgets will be expressed only in monetary terms, that is in rupee. Whereas on the basis of physical term, so in physical term, budget may also be prepared in physical terms, that is your production budget depending on the number of units to be produced, etc. So on the basis of their function, there are different kinds of budget that are prepared. You have your sales budget. Sales budget is basically a forecast of the total sales expressed in quantity and money. You have your production purchase budget. Have your purchase budget basically showing the different quantity of materials purchased during a period for the level of activity and the inventory levels. Then you have your production budget, which is based on your sales budget and the desired inventory levels. So it is basically a forecast of the quantity of production for the budgeted period. And these are the various other kinds of budgets like your administrative overhead, selling, distribution, research and development, plant utilization, capital expenditure budget. So here we will be studying in this chapter on the cash budget. So cash budget is basically the process of forecasting the expected receipts and expected payments. So basically you budget or you forecast the inflows and outflows of cash in order to meet the future obligations. So let us look into our questions on our cash budget. Okay. So from the following information, prepare a cash budget for 3 months ending 30/9/2021. So you have your month, you have your sales, purchase, wages and expenses. So your additional information that they have given is the opening cash balance, and you have your sales, purchase, wages and expenses. So depend on that they will give the additional information. So your debtors, which is nothing but your credit sales, pays in the month of following the month of sales. So for example, June you have 2 lakhs. You are not going to pay in the month of June itself. You are going to pay in the month of sales. So the debtors will be paying us in the month of July. So it is the next month that they are paying. So if this month we are making the sales, the next month they are paying the amount or the cash of sales. So if it is July 1,50,000, this 1,50,000 sales which has happened in July, the amount will be getting in the month of August, 1,50,000. That is what they are telling. The credit sales are paid in the following month. The creditors, which is your purchases, are paid in the month following in the month of purchase. Meaning to tell, if purchases are made this month, the payments for the purchases are made in the next month. So June you have 1,30,000 as your purchases. This 1,30,000 will be paid in July, the following month. Last, expenses are paid in the same month, meaning to tell wages, the expenses are paid in the same month. So June you have 10,000, that will be paid in the same month itself, in the month of June. In July you have 10,000, it will be paid in the month of July. Assume that wages are paid on monthly basis on the first of very next month. So assume wages are paid on the first of very next month. So for example, June you have 20,000 as your wages. That will be paid on the first of very next month. On July 1st it will be paid. So June's 20,000 will be paid on July 1st. So it will be accounted in July month. And they are telling us to prepare a cash budget for 3 months ending 30th September. So 30th September means September, August, July. So 3 months. So from July to September you will be preparing your cash budget. So you always start with receipts. Okay, your cash budget basically has a format. You start with receipt, you get your total of your receipts. Then you start with payments, you get your total of your payments. Then you have your closing balance. So you start with your opening balance. What have they given as the opening balance in the question? So they have given opening balance to be 60,000. So write down 60,000. Collection from debtors. So debtors, whatever is happening in sales of this month will be paid in next month. So it will be 2 lakhs will be paid in July. So you start with 2 lakhs. So June months 2 lakhs, July months 1 lakh 50,000 and August months 2 lakh and 50,000. So you write it in that way. Then you total up your receipts. So you do not have the opening balance for August and September. So you start with your July's open total receipts. So 60 plus 2 lakhs, you get 2 lakh 60,000 less your payments, your creditors, wages, expenses are all your payments. So creditors also, month of June what you have will be paid in month of July. So 1 lakh 30,000 is your June months, 1 lakh 40,000 is your July months, and 1 lakh 60,000 is your August months. Wages will be paid in the first day of the next month, meaning to tell that will also be paid in the following months. So June's 20,000, July 30,000, August 20,000. Expenses will be paid in the same month. So June months will be paid in June, July months will be paid in July, August months will be paid in August. So what you have in July is 10,000, August month in the question they have given 50,000, September month in the question they have given is 50,000. So total up your payments, you have 1 lakh 30,000 plus 20,000 plus 10,000, you get 1 lakh 60,000. So 2 lakh 60,000 minus 1 lakh 60,000, you get a closing balance of 1 lakh. So this closing balance of become 1 lakh will become the opening balance of the next month's 1 lakh. So 1 lakh plus 1 lakh 50,000, now you can total up 2 lakh 50,000. When you total up your expenses, you are getting 1 lakh 85,000. So 2 lakh 50,000 minus your payments 1 lakh 85,000, you get 65,000 as your answer. So this 65,000 become the opening balance in the month of September. So total up 65,000 plus 2 lakh 50,000, you get 3 lakh and 15,000. 3 lakh and 15,000 minus 1 lakh 95,000, you get your balance to be 1 lakh 20,000. So this 1 lakh 20,000 is your closing balance of September. So that is what they will tell us to find out every time, the opening balance and the closing balance. So you can write a note at the end, the closing balance of September is 1 lakh 20,000. So thank you everyone. Thank you.